Tesla CEO Elon Musk has visited China to boost the electric car maker's sales and promote its self-driving technology amid intense competition. The Chinese Premier Li Qiang expressed his hope for increased collaboration between the US and China, highlighting Tesla's success in China as an example of beneficial economic cooperation. Billionaire Musk praised the Shanghai factory as Tesla's top-performing facility and critical to its global strategy. He's advocating for a Chinese regulatory approval to introduce Tesla's autonomous driving technology and a planned workforce reduction. In China, Tesla has reduced the prices of its Model 3 to $32,700 and Model Y to $35,200, marking a decrease of nearly 6% for the Model 3 and around 3% for two versions of the Model Y. The company's significant manufacturing presence in Shanghai supports both local sales and exports. Tesla has enhanced its self-driving capabilities in China through a new licensing agreement with Baidu for precise lane-level mapping data. This partnership bolsters Tesla's navigation technologies in the region. Following these developments, Tesla's stock price rose over 6% in pre-market trade on Wall Street, with Baidu's shares also gaining 2.4% in Hong Kong. Well, let's get more on this now with Josh Mahoney, who's Scope Markets Chief Market Analyst. He joins us now from London. Good to have you with us as always, Josh. We know Tesla is losing its market dominance in terms of electric vehicles to China's BYD. Elon Musk's visit to China can perhaps be seen as a bit of a desperate bid to prop up sales and to remind the market that Tesla is still there. How do you think it'll do in China going forward?
Yes, certainly. It's been a bit of a tumultuous time for Tesla in China, primarily because of the price wars that have been waged in the region. I think Tesla came off the back of a ticket of being a somewhat luxurious brand that were able to command a relatively elevated price. But as they've seen increased price pressures in the Chinese region, they've had to react. And certainly BYD is at the forefront of that move. There is a feeling, though, that these price pressures and this price war that has been ongoing has had detrimental impacts to not only Tesla, but also its competitors. Of course, recently seeing those BYD numbers and significant downside in terms of the profitability of the firm as a result. So there's a hope that we might see some stabilization in terms of pricing pressures, and certainly the feeling is that with Elon Musk heading over to China, that he isn't necessarily going to give up on the region and start giving up market share to any greater degree. There's a continued focus in the region, and he really wants to be able to build out the autonomous driving segment, which key to that is also providing the mapping that he doesn't necessarily have as easily in China as he would elsewhere, with tie-ups alongside other mapping companies such as Google and alike.
For a while, it did seem that Tesla could do no wrong in the electric vehicle market, and that was reflected in its surging stock price, which has now plummeted somewhat over the last 18 months or so. Do you think Elon Musk can do anything to really get that stock price back up, at least to where it was perhaps 12 months ago?
It's difficult because ultimately Elon Musk built this company on the back of his idea of where he thought vehicles were going in the future, and he was right to an extent. But now there's a feeling that potentially he may be looking a little bit too far ahead. Again, a lot of talk about a focus on sort of automated taxi services in the future. Part of why we saw a positive result off the back of the latest earnings report was owing to the fact that they were looking to fast track a new Tesla vehicle that was going to be much more affordable. I think ultimately that part of the fear that has come recently around Tesla is the fact that, okay, while they're struggling in terms of market share over in China, the feeling is that those Chinese brands soon enough could be found within Europe, could be found within the US. There's talks of BYD setting up a new factory in Mexico that could potentially get past some of the taxes that are levied on Chinese imports. So certainly what's happening in China at the moment is a precursor to what could be happening elsewhere in the world. So there's still some concern for shareholders, but certainly a focus on providing that new cheaper vehicle vehicle will be key in trying to boost investor sentiment going forward.
Okay, Josh Mahoney, we'll leave it there for now. Great to get your thoughts as always. Thank you.
Thank you.